Thank you for taking time out of your busy day to meet with us tonight. I'm Rochelle Wilhide. I'm the designated broker and owner of Best Choice Realty. And tonight we have a guest. We have Sam.Centioli with Movement Mortgage and Patrick Sprague. He's with AllState. And we're going to have a very open conversation about insurance. So get your insurance hat on. I know sometimes when my family gets together, I have an insurance agent that's not with car or home. She's actually with airplane insurance. My sister is into that, Patrick. So once in a while, I get the insurance conversation. It's always fun to hear some stories. So before I do that, I want to just remind you guys, we are recording. If you have questions for Patrick or for Sam, if you wouldn't mind just quickly doing a chat. We are recording. So if you hear something or miss something, you certainly can listen to the recording after. We will end about 6 o'clock. And if you have pertinent questions, we certainly can take those up after, or I'm happy to call you after the call as well. So with that, I'll turn it over to Sam for a brief intro and then over to Patrick. Take it away, guys.
All right. Thanks, Rochelle. So those of you that don't know, about 2 months ago, I partnered up with Ted Buchanan. So if you see emails or advertising for me or Ted or Team Ted, it's all the same person. And I was introduced to Pat through Ted, and in the year I've been kind of working with Pat, he has saved 2 or 3 actual purchase transactions for me, and you really don't see that with insurance agents. So he's very creative when he needs to be. Most insurance is, you kind of think of it as a commodity, but actually they can be a resource. So it's been very helpful, and I would like him to share his kind of background on insurance and as it applies to real estate agents, and answer your questions. I'll get out of the way, and I'll be happy to answer any questions at the end if you have any mortgage questions. But I will hand off to Pat.
Okay, well, I guess I'll take it away. First off, Rochelle, thanks for having me, and Sam, thanks for the really kind comments. I appreciate it. So my name is Pat Sprague. I work for AllState. I'm an agent for AllState Insurance, and I've been an agent for 18 years. And I've actually worked with Ted for 17 of those 18 years. And Ted is one of the nicest guys I've ever met in my life, and he's just been a phenomenal ally for me, and really helped me. And I hope I've been able to help him. So I just want to do a little spiel on homeowners insurance and answer any questions that people might have. And the basics, first of all, is one thing I would say about the company I represent is we're in a great position to help you guys because we can always get you a binder. And when Sam was referencing helping him out, there's been times where, there's a lot of obstacles in the way, but we can still get you a binder and get that loan closed so that your client's happy. That may mean they have to switch companies in a month or so because of obstacles that are bigger than what most insurance companies will let happen. But in the meantime, just know if you ever need a binder, we can get it done for you no matter what. And what makes us special is we can do it within an hour. A lot of companies take a couple days to get you a binder, and I know that sometimes you need it quicker than that. So that's my little spiel for AllState. On the homeowners insurance itself, there's a couple things that I think people aren't aware of, and that is the depth and quality of a homeowner's insurance policy. And, there's a lot of companies out there that'll sell a cheaper policy, but they're probably not replacement cost, or they don't have the extended coverage necessary for your client. So if there's a total loss of their home, they'll be walking away without enough coverage. And so that's the most important thing, is that your client, that you or your client has replacement cost coverage for the value of the structure with a 40% surplus, so that just in case it costs more than what we've estimated to rebuild the home, there's a 40% add-on. So in my 18 years, in the losses I've seen, I've never had a client that didn't have enough coverage. So we've taken great care of our clients. So the basics of the homeowner's insurance: you want replacement cost coverage for the structure. a lot of people get confused because maybe the purchase price is $1 million and the homeowner's insurance coverage is for $400,000. So people think, well, why isn't it $1 million? Well, it's because the homeowner's insurance only covers the structure and all the personal property and all the liability for a client. So anyway, we have an estimator that estimates each home. It's within 10% it's always within 10% of replacement cost. And that's why we offer the 40% in addition, above and beyond the replacement cost value of a house, so that we make sure that the client has coverage in the case of a loss. Now, a couple things that I want to explain that not everybody knows. There's always a deductible, just like on your auto insurance. You get in an accident, there's a deductible. Same with the homeowner's insurance, there's a standard deductible. And that ranges anywhere from $1,000 for a claim to 2% of the home value for a claim. And where I like to think we add value is making sure that we can talk to a client before they decide to turn in a claim. Because what happens is, if somebody turns in a claim for $3,000 on their homeowner's insurance and their deductible is $2,000, yeah, they're going to walk away with $1,000 in their pocket, but they now have a claim on their policy on their home that will follow them for the next 5 years. And that can be a problem, because if a client has another claim within the next 5 years, they can be canceled. And if they're canceled, then they got to go to a high risk company, which can be 10 to 20 times as much. So we like to make sure it makes sense to file a claim whenever there's a loss. A couple things that are important to have on a homeowner's insurance, as far as I'm concerned, is make sure you have replacement cost coverage. Make sure you have all your contents covered. Make sure that you have any jewelry that's over $1,500 in value covered, scheduled, so that if it's lost or stolen, then you recover the full amount of the jewelry. Because there's limits for everything on every homeowner's policy, and jewelry has a limit of $1,000 per item, so that's important to schedule personal property on a homeowner's insurance policy. The other thing I always recommend is, if your client's going to get homeowner's insurance with us, we always want to quote the auto. Your best bet is to bundle your insurance. It's always going to be cheaper. Companies are offering more and more incentives to do that, so keep that in mind as well. Let me see. So that's the basics. I don't want to kill you guys with too much on homeowners insurance, but I am really happy to answer any questions that anybody has about homeowners insurance, how long it takes to get it, what happens with the process with us. I hope that's not too much, but I appreciate the opportunity to kind of explain the basics.
Yeah, no, that's great, Pat. So if I could jump in, I think the basics is, you have to have a binder if you're getting a loan, right?
Correct.
So what if somebody's paying cash for the place, not getting a loan? No offense, Sam. Does that something they typically go through an insurance broker like you? Can you only shop with AllState, or do you have the ability to shop others? I think that's some other questions that will come through the chat if they haven't already showed up. What are their options when it comes to these types of things?
So if somebody's just buying it cash, you still need to cover the structure so that you're protecting your asset. And yeah, there's probably, I would say, 15 different companies in the state of Washington that offer homeowners insurance, but not all of them are replacement cost coverage, and not all of them offer extended certain, about half the companies out there will actually offer additional living expenses. So if you can't live in your house because of a claim, we'll pay for your living expenses for up to a year, where if you have to live somewhere else. Not every company offers that. So there's Nordstrom's of homeowners insurance policies, and then there's Target of homeowners insurance policies.
Okay.
Yeah, if that makes sense.
But with your creativity, Pat, are you able to kind of intercept? I mean, depending on the client situation and what they're looking to do does Allstate have the breadth of product where you could just say, okay, we're going to put you in this kind of category? Is it pretty simple and straightforward?
It's very simple and straightforward. We don't ever want to put somebody in anything but our full product.
Okay.
Because that's just too much risk, and it's not worth the few bucks to minimize that coverage, because if there's a loss, you just don't want to leave a client in that situation. But companies do that, and that's where we really help a lot of people. Is there's other companies out there that just don't have the breadth and depth of coverage we have, and we point that out.
Mm-hmm.
You know, they might be saving $15 a year, but they're missing a lot of coverages on the policy.
Okay. And the other question I think I have is, I've run into some situations, and maybe Sam has too, where they were under contract with a property, a house came up, and we needed there's something that the seller was not disclosing, like they maybe had a past claim. Do you have like a database, or how would we go about finding whether they had a claim on their insurance? Is that something you could look up?
Absolutely. That's a great question. So if let's say you're buying a property, Rochelle, and there's a claim in the past 5 years, it'll show up on the clue report. It won't affect your rates at all, but it'll show you if there's been a claim on that home in the past 5 years.
Okay. So that's just a simple phone call or text or email to you, right?
Sure. Absolutely.
That's awesome. And then the other question I think is, when you get an insurance, I know there's my father-in-law, he used to be at PEMCO. So that was back in the day. So he was car insurance and then a home insurance adjuster for many, many years. That was his full-time gig.
Awesome.
He's now retired. So he's no longer in retirement, or no longer doing these types of things, but he would go out and have to determine whether it was part of the coverage or not. What determines that? Is it just kind of like a, yes, this is covered, or no, this is covered, or has insurance become easier to understand for the consumer and for the company?
Unfortunately, I don't think it's gotten a lot easier. There's what we call named perils: wind, hail. Those are the most common. Theft, that's another common. Fire, those are the big ones on homeowners insurance. There's sometimes extenuating circumstances where there might be a claim, but for the most part, it's pretty simple and straightforward. I'm hoping I'm answering your question.
Yeah, it's like, so it's kind of black or white. It's really, it's covered or it's not covered.
Right.
There's not a lot of, so I think consumers often confuse, like when we start meeting with them, I'm speaking like I'm a listing agent, Patrick. So now I'm like, I go out and do a listing appointment. They want to put their home on the market, and they had water damage, for example, underneath the kitchen sink, like so much where it buckled the flooring.
Sure.
Right. So is that a claim that's covered with, say, Allstate, or is that
absolutely? Absolutely. The way a claim is, the best way I can describe a claim is if it's sudden and accidental.
Okay.
And in that case, it's a water leak, sudden and accidental. It would be covered on a homeowner's insurance policy. And if you were buying that home from that person that had that claim, it would not affect you going forward. However, it would affect that homeowner when they move in their new house. Mm-hmm. They carry that claim with them for 5 years. So it'll make their rate more expensive on their next purchase. Got
it. So it's kind of important to look at those types of situations, look at their options, because I think sellers want to know their options. And so not all insurance companies are made alike. Is that right? So
that's correct. That's correct. And what's unique about Allstate is we like to think we're ahead of the game because we're agents and we take special care of our clients. Whereas there's a lot of companies that just have 1-800 numbers. So they don't give their clients the personal attention they deserve like Allstate does. And that's what separates us.
Okay. And then
so you might call another company and say, I've got water damage, and they'll start a claim for you without really looking to see whether it makes sense for you to do that or not.
Right. Okay. So it's more of a full service option that you guys
absolutely
have. Yeah.
Absolutely.
Perfect. The other question that I think we need some more explanation on is, how can you be so creative, Patrick, when, is it because some of your competitors deny the file? Like when it gets to Sam's desk, I mean, we're in like closing next week. We got to have the binder. You talked about that. What is that? how can you be creative? Are you saving people money? Are you looking at their situation? How do you get this done when
Every
somebody,
situation is different. Sometimes Ted says, hey, I got to keep the premium below this amount or they're not going to close on their loan. So we'll
oh,
get creative with that client initially and do whatever we have to do to make that rate acceptable. And we were very clear with the client, the situation, so that they can get their loan closed. And then we can immediately after the loan closed, adjust that policy to make sure the house is maybe protected with a max amount. But yeah, I mean, when it comes to getting a loan closed, we'll do anything to help. I'll do anything to help Ted get it closed. And then I'll take care of the client after the closing.
so it's like you're rebundling then. You send the binder out initially, and then basically after they've lived in the home and they've got some residency and they kind of figure out their assets, basically, then you would sit down and kind of go over that with them.
Yeah, well, once the loan's closed and everything's okay, then we'll call them and say, hey, here's what we need to do. We need to adjust this and adjust this so you're properly covered, and it's going to be this much more money. By that point, most people are happy to do it because they're grateful that they were able to close based on maybe their extenuating circumstances.
Okay. Perfect. So are there things that you don't do, Patrick, as far as insurance?
We do home, auto, we do condo. No, we do rentals. There's nothing we can't do on the property side.
Okay. Manufactured homes, not a problem there. There's no limits.
No.
No. Okay. What about flood insurance? If somebody had to do a flood insurance rider or earthquake insurance, is that?
We do both of those as well. What people need to realize is flood insurance is the same price no matter where you go. We do the flood insurance, but it's all through FEMA. So
Okay.
even though we contract it, the rate is from the federal government. But we do have a solid AllState has solid flood insurance and earthquake insurance.
Okay. And the earthquake insurance, then, is that also FEMA or is that something different? That's
different. There's 3 or 4 different companies right now that insure earthquake in the greater Seattle and Washington area. And so we'll shop those 3 or 4 companies for the best rate and the best coverage.
Okay.
And I'm a big proponent of it. I just think that it's important to have earthquake insurance because if we have an earthquake and the house moves off the foundation, you're out of house and there's nothing you can do about it because it's not covered on a homeowner's policy.
Yeah. What's the price range for just kind of this 2,500 square foot for earthquake insurance?
Depends on the age of the house and actually the location.
Really?
There's actually higher priced areas based on seismic activity.
Is that right?
Yeah. So if you live on the I-90 corridor, it's more expensive because there's a fault line that runs right through Bainbridge and up I-90.
Mhm.
And so they've figured out based on what kind of earthquake possibilities there are. So, but the older the house, generally the more expensive the earthquake insurance is.
Okay.
But then there's the other side of it is, boy, that house has probably been, if the house has been there 80 years, it's made a few earthquakes already. So,
Right.
it's just, I'm a big believer in it, but not everybody is.
So is it more expensive then on the newer?
No, I would say it's less expensive on the newer homes, the way they're built, their structure, and in especially our area, it's cheaper. The newer homes are cheaper for earthquake insurance.
Okay, very good. I think I got my question. Let me check the chat real quick, see if I've got a few more. Doing great though, Patrick.
Oh, thanks. Yeah, it's a pleasure.
So Patrick, can I throw a question in? So
Sure, go for it.
There's a new law a month or 2 ago about you can't use credit scores anymore to price insurance, right? How have you seen that affect quotes overall?
It's been great for us, for AllState. Our rates are better overall. I couldn't answer that for some other companies. I know there's a couple out there though where their rates have gone skyrocket, and we've gotten a lot of business that way too. And I don't know how long that moratorium is going to stay in place, but right now it's really helping us.
You're not repricing existing policies; it's just new policies that's affecting.
Yes, correct.
Let's see. If there's any other questions, go ahead and shoot them over in the chat. Shannon, if you could just go ahead and put up on the screen the insurance. We actually have an insurance addendum, Patrick. You're going to get a little training too. See a
All
little bit
right.
of my world. How about that for a few
I
minutes?
love it.
So I can have her put up on the screen. I don't know if you guys knew this, but Best Choice Realty and Washington Association of Realtors and the Northwest MLS has a contingency. And this contingency is something, especially if you're working in the flood areas, or you find out that maybe there is a claim on the homeowner's insurance and you do want to make this a contingency. I don't know if some of you knew that we had it, but it's 22 VV. And what this is an additional contingency that talks about the notice about homeowner's insurance, and it's conditioned on the buyer obtaining a binder for a standard policy of homeowner insurance, and it kind of puts a rate in there. So I'm curious to see what Patrick thinks about this on, this 0.5 to 1% of the purchase price, not to exceed $1,000. Basically, buyers shall make application within 5 days of mutual acceptance. If not, then the contingency is waived unless we give notice of termination. So it's kind of a way that the buyer can wiggle out of the deal if there was a homeowner's insurance binder or an insurance policy that was maybe exceeded their budget. Has anybody used this? I'd be curious to know. And there's a 90 VV, a way to terminate based on homeowner's insurance. You might waive the inspection, you might waive everything else, but maybe this is important to your buyers, especially if they're buying something maybe in the flood zone or in an area where there might have been some disclosure from the seller that there was some claims on the insurance. Fire, I know there was a cell down in Tacoma that we did, which was literally a fire cell, burned down, and we had to basically, we waived inspection, but we wanted to make sure at least that we had an insurance policy, somebody that would cover that, right, Patrick? I don't know if you run into those kind of weird ones.
Well, there are companies out there that won't insure a home if there was claims on it. So that I can see where this might come in handy if an agent or the buyer is not aware that there are other options out there like AllState. Because I won't name them, but there's 3 or 4 major companies that won't touch a home with a water claim on. So I've never seen this used before in my world because we've been able to help everybody and anybody, but I'm sure this happens with some of the other companies out there.
Yeah, no, that's great. And have somebody that has that type of experience, and your guys are giving the full service on your insurance. I think this is probably, but if you're getting a client and they're just going to be shopping around and this is important to them. I mean, I think the reason they created this back in the 2015, this is when they actually instituted this addendum and had it available for consumers, was because of the increase in the flood insurance by FEMA. This was around 2015. And I can't remember if that was before or after the slide that happened, but it was kind of right around that time where we're talking about soil stability and insurance policies, and then obviously FEMA getting involved and having to do a lot of flood type of situations where it went up substantially. How do you look up a flood, Patrick? I mean, do you have a grid that you use? That was a question that came through.
How do I look up a flood or look up
if it had a past water issue?
So unfortunately, there's no way of finding out if there was ever a flood claim on a home.
Okay.
But generally speaking, some of the areas that maybe are impacted most, like let's say Carnation, the insurance can be really expensive for flood insurance, and if they're to be able to accurately quote flood insurance for a year, you need what is called an elevation certificate that prices out the policy. And sometimes you have to order one if you're buying a house, and that can be $1,000 to order one because you have to have an actual surveyor come out and survey the property so that you get an elevation certificate, so that you can actually get the policy, a flood policy quoted through FEMA. Okay. So it can be a real can be a real showstopper for people in a flood zone.
Okay. So I think we all have access to flood map. So we kind of can go on to basically, I'll share it real quick so you can see it. But you would go into our matrix, which is where we go to find properties. And then we go into the actual property itself, and we can go into realist, and we can see whether it was on a floodplain or not, or if it's 100-year. Is there a difference, Patrick, between like the 500-year and the 100-year when it comes to
Yes,
the insurance is
as
done?
to your point, pretty much the whole western part of the state is considered a flood zone,
Okay.
but there's most of those areas a bank would, because of the chance of a flood based on the area, a
Mhm.
lender's not even worried about it.
Let's look at that one right there, the Issaquah Hobart Road. So you would go
Yes.
into flood map right there. So we
Mhm.
all have access to it. And then it puts it on like a map like this for us.
Yeah, that's awesome. That is
And
a
so-
great tool.
So yeah, so this is just one that's showing us it's in looks like it's that particular property is in 100-year. It's based on purple. So
Yeah,
it's 100-year floodway.
yes. And that's also on a river that meanders, so it could break out of its course if there's a heavy flood. So I bet that's an expensive flood policy right there.
Okay.
Yeah.
So that would be just a quote that we would get from somebody like you?
Yes. Yes.
And would it be helpful if we just said, here's the address and it's in a 100-year floodway? Is that kind of what you need in order to quote it out?
Yeah, and the client's name that's possibly going to be buying that place, the property. And the other thing you guys should know is that you have to start, when you start a flood policy, it has to start 30 days out. So even though you may need it for a close in 15 days, FEMA won't close on an actual flood policy for 30 days, and there's no exceptions to that. So,
Okay.
so that can also be kind of a showstopper. So if you know that a home's in a floodplain, or you're guessing it might be, it's good to jump on that early, just to make sure that it doesn't delay a closing.
Okay, very good. Well, that's some great information. I think we took quite a bit away. Patrick, you did great.
Oh,
Is
I
there
really
any-
appreciate the opportunity. Thanks.
Yeah, and then we have, how do we get a hold of you? Do you want to give me your email, phone number?
If you don't mind, I will. First off, my email address is PSprague, that's PSprague
Okay.
at allstate.com. And my personal cell phone number, and I love it if you call me, it's 425-830-3333. And so if you're in a bind and you're feeling stuck, give us a try. And reach out to Ted as well and see how if he's been happy with my performance. I think we've really had a great relationship, and he's the one who asked if I wanted to get involved in this. I said, sure, I'd love to. So thanks again, Rochelle.
You're welcome. Now you came highly recommended from Ted.
Thank you.
So
That's awesome.
we're
I
excited to
appreciate
have that connection. Whereabouts are you based out of? Which office?
So I have 3 locations in Greater Salem. I have one in Lakewood, one in Renton, and one out in Snoqualmie. But
Okay.
we insure the entire state of Washington.
Wonderful. So we service the entire area of Washington too. So
Yes.
we're in shape.
Yeah, I hear you guys are doing fantastic.
We are doing fantastic. We're having a
Good.
great month and a great year, and just on a great trajectory.
That's awesome. Congratulations.
So thank you for that. Well,
Yeah.
awesome. Well, I'll let you guys go. If you have any other questions, stay on later. If not, have a great week. We'll catch you next Monday.